as capital flees the U.S. markets and treasuries collapse and everybody hates America and everything bad happens, capital controls, fiscal dominance. The U.S. Is going to maybe tax foreign holdings rather than impose new tariffs. This will push global investors away from the U.S. into alternative assets, with Bitcoin as a prime beneficiary.
Welcome back to the weekly Bitcoin.com's no-nonsense roundup of what actually matters in crypto. I'm Graham Stone here with David Sencil, and this week it's all about Bitcoin Treasury revolution. Public companies are piling into BTC like it's 2020 all over again, but this time it's global. From a $710 million healthcare merger in the US to new crypto treasury moves in China, Brazil, the Middle East, and even the whiskey business. Bitcoin is rapidly becoming a mainstream balance sheet asset. Meanwhile, the US seems to be experiencing capital exodus. Treasury markets are wobbling. And one of our favorite prognosticators, Arthur Hayes, says it's all leading to a $1 million Bitcoin price by 2028. We're going to be covering all that in this week's show. But before we get into it, don't forget to subscribe to David's newsletter at bitcoin.com/newsletters for the sharpest 5 minutes per week signal in a very noisy space. All right, let's get into it.
Let's start with the Bitcoin Corporate Treasury Roundup. Anyone familiar with this show and Token Narratives, our podcast, will also be familiar with the rapidly increasing popularity of this space. Nakamoto Holdings is merging with healthcare firm Kindly MD in a $710 million deal to launch a publicly traded Bitcoin Treasury company. This is the largest crypto private investment in public equity in history. Backed by $510 million in equity and $200 million in notes, the deal will create a first-of-its-kind conglomerate blending Bitcoin accumulation with healthcare operations. Nakamoto's CEO, David Bailey, who is also the CEO of Bitcoin Incorporated, will lead the new entity, which aims to list Bitcoin-linked instruments globally and mirror Wall Street's capital market power, with Bitcoin at its core.
I think what's interesting about this is, on the face of it at least, that it's blending a profitable business with Bitcoin Treasury growth. So you have some healthcare services business. So it's not just a pure Bitcoin accumulation play. There's a viable business in there, which I think is important.
Couple points too for this. The first is that you're seeing kind of Bitcoin really be integrated into or accepted by, exploited by Wall Street. And so the fact that you're having this business start, and also I think, was it 21 and some others, really shows kind of the growing appetite by institutions for Bitcoin-backed business models. And the fact that this is like the company 21 before it, the fact that it's kind of being run by crypto native people, in this case David Bailey, and the other one you had was it Stripe and
Yep.
Tether. So you're seeing kind of the melding of crypto's finest with Wall Street.
With Wall Street, exactly. And so in the 21 case, you had SoftBank. In this case, it looks like we've got something called Arrington Capital, VANC, which is more TradFi than crypto, and other people participating in this. Moving on, in other Bitcoin corporate treasury news, we got a U.S. craft distillery going in. To me, this one kind of reeks of Long Island blockchain. It's a bit feels like that from the 2017, I think, when when that company just renamed, they added blockchain to their name, the marketing boost. But the other one mentioned here in this story is a Singaporean medical firm, and it has plans for a $1 billion BTC acquisition via a share swap deal. So that one, I don't know. It's the share swap deal may be a new mechanism, and certainly, if you believe what they're saying here, a $1 billion BTC acquisition is nothing to shake a stick at.
Yeah, I mean,
Well, the whiskey one was just like 5 Bitcoin, I think they put on there.
well, that's the next story as well. Moving on, we have the first Middle East company jumping into this. A1 Abraj Restaurants Group has become the first publicly traded company in the Middle East to accept Bitcoin as a Treasury reserve asset, and it's starting with an initial 5 BTC purchase. And of course, it intends to expand its holdings through a partnership with IOX Capital. So, again, you're starting to see, in this case, a restaurant group move into putting Bitcoin on the balance sheet. We're starting to move downstream, right? From very large companies to much smaller ones.
Yeah, although I would say it's interesting. This is the first one in the Middle East, and even though it's a restaurant group, that may be besides the point, because now like it unlocks a new pool of capital, like basically people in equities markets in that region that can get exposure to Bitcoin through the equity markets, basically, which is a bit different from buying it in other forms, I think. So there's like more financial engineering you can do there.
Oh, great. More financial engineering.
Yeah. But sticking to the Bitcoin corporate treasury theme, we have Melus, which is a Brazilian cashback business, and it's become the first public company in Brazil and LATAM to establish a Bitcoin corporate treasury strategy. The CEO explained that Melus had jumped onto the Bitcoin treasury bandwagon as its shareholders approved the move by a wide majority. And they acquired 274.5 BTC for $28 million at an average price of $103,604. So buying the top. It's the first one in the region. And I think as we mentioned maybe a week or two ago on this show, there's another one in the pipeline, Orange, also in Brazil. Orange, and they aim to invest over 200 million in BTC during their first year of operations, but it looks like they haven't actually made any purchases yet, if Melus is the first.
In other LATAM news, Panama City, Panama, not the awesome Florida destination for spring break, might be on the verge of taking an important step to becoming a Bitcoin pioneer. The mayor of Panama City, which is, get this, Mayor Mizrachi, has awoken speculation from part of the crypto community with a cryptic post after meeting known Bitcoin proponents Max Kaiser and Stacy Herbert. And social media, Mizrachi assessed that this meeting was, quote, only the beginning of great things to come, end quote, after posting Bitcoin Reserve earlier. So here we have a LATAM city maybe following suit from these corporate treasury Bitcoin holders. We talked about last week 2 states in the U.S. Passing legislation, giving them the ability to put Bitcoin on their state balance sheet. So maybe Panama City is going to jump in this.
One other thing to note here is there may be some move to actually mine Bitcoin in Panama City, Panama, using the nation's hydroelectric resources. At least that's what has been implied by Max Kaiser. Yeah.
So not actually purchasing stuff outright. Right.
Possibly.
Also, Mayor Mizrachi will be speaking at the upcoming Bitcoin conference in Las Vegas. I'll be there, so I'll be interested in hearing what he has to say.
Sticking again to the Bitcoin corporate treasury meta, it never ends.
Never ends.
Yeah, we got company after company going down this route. The latest one out of China, first one out of China, actually, DDC Enterprise, which is listed on the New York Stock Exchange America. It's the one that's operated by ICE, not the NASDAQ. So anyway, they announced plans to acquire 5,000 BTC by mid-2027 as part of their new Bitcoin corporate treasury strategy. And they're starting with an immediate 100 BTC purchase, aiming for 500 BTC over the next 6 months.
The important thing here are some of the details. Number one, this is happening for a Chinese company, Chinese linked company, not. I don't think that they're incorporated in China, right? So they're nominally not controlled by the Chinese government. So that's kind of how this is able to happen. Obviously, the Chinese government is still fairly antagonistic towards Bitcoin and crypto. However,
well,
the fact
just to clarify on that. So I looked into this, and the latest status is right. You can hold Bitcoin, and you can do like OTC trades, I guess, of Bitcoin, but there's no Bitcoin exchanges allowed in China.
or mining,
Officially.
right? Mining
Or
is
mining,
still,
yes.
yeah. Does that extend to? Because I think that also extends to, like, for example, stablecoin payments and stuff. I don't think those are allowed either. But
I would
anyway,
assume,
I have to check that. For me, the biggest thing for this story is the fact that a nominally or kind of quasi-linked Chinese company is doing this. Kind of feels to me like maybe China is softening its stance, or will soften its stance on further on Bitcoin and crypto, which would be huge. Would be a huge change. Graham, you'll remember. Anyone who was earlier will remember. In 2017, China was a huge. Chinese companies were a huge part of the market. Right, they moved the market a lot, and when that went away, it definitely took the wind out of the market's sails.
Yeah, exactly. And I mean, just the fact that this company, they must have people involved with the company in China. The fact that they are willing to do this, maybe, yeah, as you say, it hints that like they're not going to instantly become pariahs, perhaps, which would hint that China might be softening its stance. Like they're maybe the people at this company know something. Okay, it's okay to do this.
Interesting movements. I could also see China not wanting to overtly or explicitly allow Bitcoin or other crypto, because it kind of makes their capital controls a little more leaky. So
Yeah.
you might have this situation for many years where the letter of the law is no, but you can kind of elide those things by doing stuff like this.
Sure, exactly. And this mechanism, I guess, is easier for them to keep an eye on
Yeah, exactly.
than P2P transactions of Bitcoin.
Yeah,
All
or
right,
God
so,
forbid,
yeah.
letting their citizens do anything, like what's it called?
Yes.
Like move money out of the. Another China news. In March, China sold nearly $19 billion in U.S. Treasuries, bringing its total holdings down to $765.4 billion. This is its lowest level in years. And this divestment comes obviously during this heightened tensions with the U.S. over trade. The move drops China to the third largest holder of U.S. debt, now behind Japan and the U.K. The shift reflects growing concerns with China about the politicization of U.S. debt and its potential vulnerability to what the U.S. and the West did with Russia, which could, which means that we could freeze assets and basically steal a lot of their money. Chinese economists are calling for diversified global asset strategies and increased protection of overseas assets. This did kind of coincide with Moody's downgrade of the U.S. credit rating from AAA to A1, citing rising debt levels and unsustainable interest payments. I personally think that this was not done.
They're not connected.
They're not connected, yeah. What do you think?
I don't know, but and look, I think that whether China actually sold the U.S. Treasuries because they don't believe in the strength of the like U.S. economy or the ability of the U.S. to pay back, or it's because they sold it because they just needed dollars. Either way, I think the fact that China's net holdings of U.S. Treasuries are going down feeds into the narrative that the de-dollarization narrative, right, which is bullish for Bitcoin. So I think that's quite interesting.
Yeah. I mean, it's a very complicated situation vis-a-vis China and their holding of U.S. debt. I've listened to a lot of much smarter people talk about this. And just to give you some feel for it, China, for example, has been selling U.S. debt, U.S. Treasuries, sovereign bonds. But at the same time, they've been increasing the number of municipality bonds, which is basically the same kind of thing. They're a little further out in the risk curve, so they get a higher interest rate, but they're really, really, really low risk as well. But then they don't get counted in this equation, and so you can see the line of China's holding of U.S. sovereign bonds go down, and people say, "Oh, the sky's falling. Look, they're not holding that much U.S. debt anymore," but they still kind of are, right?
So they just moved it from the national debt to like municipal, as in they're buying New York
States
City's debt.
Yeah. States and like utility companies and things of this nature. Now, I mean, why are they doing this? What is going on here? And then, as you hinted at, the Chinese yuan has been under an incredible amount of pressure for like the past 18 months. It is pegged to the dollar. So when you see them sell treasuries like this, there's a high likelihood that they're using that to support the peg, right? Because they need the dollars to make sure that the peg doesn't break. Is that what's going on? I don't know, but you can't just automatically assume that the reason that China's doing this is, number one, voluntary. They're doing this because it's their choice, or if it's forced. But yeah, something to be aware of and watch.
Yeah, that's a good point. Just continuing on this de-dollarization narrative, there was another story recently, which is that Russia announced that 93% of trade that's conducted within the Eurasian Economic Union, so that includes like countries like Belarus, Kazakhstan, Armenia, and Kyrgyzstan, is now conducted in national currencies, not US dollars. Now, this is up from 70% in 2015. And so, yeah, it's just another point in the narrative that de-dollarization is happening again. And that is, at least in theory, bullish for non-dollar assets like Bitcoin.
Yeah, I mean, everyone who has watched this or Token Narratives will know that I and the constant. I'm not a defender of the dollar because I think it's deeply flawed. I just don't know what else is going to replace it or what's better for it right now. And these kinds of stories have been coming out for more than 20 years. With the BRICS stories have been coming out for forever. Maybe, well, I guess that's 10 years for BRICS. But even before that, this idea of de-dollarization, right? The euro was going to replace the dollar, right? The yen was going to usurp the dollar. So this is kind of a very, very old story, and maybe this time is different. But the thing that I'll note for this is what I've realized from seeing these stories over the past however long is there's lots of tells for this. So, for example, it says 92% of trade within the Eurasian Economic Union is now conducted in national currencies. Is this by volume? Is this by value amount or dollar amount? And what are the goods priced in? Right? That I pretty much guarantee you that the things that they're trading are priced in dollars, and then the currencies are used with their dollar equivalents, right? Their cross pairs to pay for the things. This means that they are paid by proxy in dollars. The goods are not priced natively in their local currency, right? They're priced in dollars, most likely. Okay. So it's just a dollar proxy.
Or as some may argue, you're just spewing semantics. But
no
let's
way.
Move on.
No way. If you trade what's it called? Let's say you have a Bitcoin and you have Ethereum, right? And you want to trade some Ethereum for Bitcoin. The thing that you have BTC ETH, right? But even that is basically it has a USD intermediate in between it, right?
I mean, in my head, I think, okay, I'm selling some of my Bitcoin that's worth $100,000 per Bitcoin for some Ethereum.
Exactly.
That's worth $2,000 per Ethereum.
Exactly.
Right? And so then the same thing is happening.
Yeah, exactly.
It's a mental framing more than anything, perhaps.
Well, no, it means that the thing that you're trading against is not Bitcoin and Ethereum. It's the dollar, right? That's the thing you're trading against. Even though there's no dollar in the BTC ETH thing, you're like, oh, I just did a native crypto to crypto swap. No, you didn't. No, you didn't. There is no second best.
Okay. Well,
that was terrible.
let's move on to one of our favorite, again, prognosticators in the crypto space, Arthur Hayes. Could you tee this one up?
What a legend. So Arthur Hayes, he is predicting that Bitcoin will soar to $1 million as capital flees the U.S. markets and treasuries collapse and everybody hates America and everything bad happens, capital controls, fiscal dominance. In his May 14th blog, Hayes warned of a coming shift where the U.S. Is going to maybe tax foreign holdings rather than impose new tariffs. This will push global investors away from the U.S. into alternative assets with Bitcoin as a prime beneficiary, especially since Bitcoin has such a small relative market cap versus other assets like gold or even foreign equities. He describes Bitcoin as the last free market lifeboat capable of thriving in a world of restricted capital flows and weakening fiat regimes.
Yeah. Well, look, we had the Moodys downgrading of U.S. debt. We had the big, beautiful bill proposal coming out in the U.S. Recently, which basically is saying there's no austerity. It's massive deficit spending. People are predicting the deficit to GDP ratio to rise from its already high, I think 6% to like 9% over the next 5-10 years, where at that stage, 30% of the budget will be spent on interest payments. You've seen the Treasury market wobbling, as they say. So Treasury buyers aren't buying that. They're not buying as much as they would be. So the interest rate's going up, right? There's less trust in U.S. Treasuries. Okay, so all of these things are pointing to what we've seen, like in the entire history of Bitcoin, is that the money goes to the hard asset.
Yeah, I mean, a lot of this I agree with what Arthur Hayes is saying, and I also agree that the price of Bitcoin will increase a lot. Some of the details, maybe, or the reasons why, I think are maybe a little exaggerated. But I definitely do think that the U.S. is in danger of enacting capital controls because the debt situation is on an unsustainable path, and that definitely is in the cards. Just important to note that if this is going to happen to the U.S., right, which I agree, is it not going to happen to Europe? Is it not going to happen to Japan?
Everywhere else, yeah.
It already is happening in China. When you say these things about the U.S., you also have to look at what other countries, what countries are not going to have this happen.
Yeah,
and
so
I think it'll happen everywhere else.
Yeah, and I think that supports the argument that it just means strength for Bitcoin in the end, because it's not like you're going to escape the U.S. and go to Europe with your treasuries or whatever. You're going to go to another asset class entirely, and one that is, has a cap on the supply and one that's not controlled by a government. Let's talk about Coinbase for a minute, because it's a pretty major story, right? Coinbase is now in the S&P 500.
Woohoo!
And it's not just asset 499 on the list. It already is at something like 150 on the list, the 150th biggest by market cap. So yeah, pretty huge news, pretty big signal that crypto is here to stay. And as has been mentioned many times, what this means is that everyone who passively invests in the stock market, which is like everyone, so all the index funds, your 401k, you now have exposure to Coinbase, the crypto company.
Pretty wild to think about. Yeah.
When it starts, which I think is actually tomorrow in the US.
Yeah, passive investment. So mechanically speaking, lots of people are gonna be buying Coinbase, fractions of Coinbase shares. It's probably just the first of at least several companies that are going to be included in the S&P 500. Wasn't Strategy vying for this as well for a while? So I mean, if that would be wild if that
Strategy's in the NASDAQ.
But I think they're trying to talking about that, but a big kind of symbolic move, I think, to be kind of included in the big boy club like that.
Yep.
And good congratulations to Coinbase. I think probably the best crypto company to represent us. But, speaking of which, even the best of us has hard days. And last week also, Coinbase had a very high and a low. So Coinbase revealed a data breach involving bribed overseas support agents who leaked user info. Coinbase claims that no funds were stolen, but lots of sensitive personal data was accessed and stolen. Coinbase rejected a $20 million extortion attempt and instead launched a $20 million reward fund to catch the attackers. They have initially set aside, or they've publicly announced, between $180 to $400 million financial hit. Some of that will be used to compensate users who have been scammed afterwards. And if you go on Twitter or X, you can see people claiming to have had phishing attacks against them. So it's pretty wild.
The phishing attack thing is pretty out of control in crypto. However, I would say that I don't think this data breach is like a big problem for Coinbase. I don't think it really overshadows their getting into the S&P 500. I think it's sort of par for the course these days. Big companies have data breaches, and everyone just expects that, sadly.
Yeah, but I mean, I think crypto companies are a particularly juicy target because they are pretty censorship resistant, and once you take the crypto, you really have a lot of trouble getting them back, right?
Yeah,
and
if you can scam someone into sending you crypto, then that's it. You're done.
Yeah. Or God forbid, you're able to breach the centralized entity itself, right? The true honeypot, right? Like Bybit experienced. So it is wild, though, that I think after Bybit, I think that was, for me and for people in the industry, the first big wake-up call in several years, that here is one of the best companies who have executed at the highest level, and they got hit hard. And here you have Coinbase, who is, I would say, number one in this, right? And they also just got exploited. So really, every other company in the space needs to be paying attention and spending more money and time on OPSEC, right? Like, it has to be the case. If Coinbase, this happens to Coinbase, I seriously think it can happen to anybody.
And I mean, in this case, it's supposedly a support agent was bribed, but I guess that begs the question of, like, why did the support agent have access to, like, unencrypted customer information that they could take a bribe and send that to the attackers? So let's play this video, because this is the latest attack. This one again in Paris, and it's quite a shock.
You gonna set this up?
Watch. This is the daughter of a crypto exchange executive or something, and like 34-year-old daughter with her 2-year-old infant with her, getting kidnapped in the street, attempted kidnap, and we got the video of it.
Daylight.
Appelle la police, Chloé. Oui, tu appelles le 17. Le 17, Chloé. Le 17. Le 17, Chloé. Le 17.
Chilling, man. It's crazy. The number of wrench attacks is on the rise, right? This was from the previous week, but now 2 weeks ago, there was another one where a father was kidnapped and mutilated, also in France. We covered that, or I covered that in my newsletter last week. Pretty gruesome. And then earlier this month, a 56-year-old father of a Dubai-based crypto influencer was discovered in the car trunk, also linked to ransom demands for crypto. And then earlier this year in January, these are all the kind of the high-profile ones. I know, Graham, you've also seen some other ones online.
Yeah, there's been some in Thailand, at least one, similar like kidnapping attempts.
So in January, the co-founder of Ledger, I think you guys will all remember this. Oh, this is another French one. This is all in France. I wonder if this is a French phenomenon. Anyway, Ledger, cryptocurrency company valued at over $1 billion. He was abducted with his wife, and his fingers were also cut off, and his wife was found in a car trunk later too. So rent tax on the rise, guys. Kind of makes sense, I think, with crypto becoming more mainstream and the kind of non-recourse nature of once you are relieved of your crypto or forced out of it, you can't really get it back.
Yeah. Is there anything people can do to avoid this?
Yeah, I mean, I would say we've talked about this before, but the number one thing is don't really advertise that you have crypto, you hold crypto to strangers, right? If you're at a bar or you're out talking to people, I would advise against talking about that, how you have crypto. I'd even advise against talking about how you work for crypto or you have an interest in crypto. Just probably try to keep it kind of low key, downplay that you have any holdings, talk about how you're poor and you're going to have fun staying poor, things of that nature. But I think basically people in crypto who hold crypto are going to have to improve their situational awareness and just kind of realize everybody, if you give somebody $1,000, like 1,000 actual dollars in cash, which I've had happen to me a couple times in Japan. It was a very common thing in Japan. You would just get your paycheck in an envelope every month, right? So you get $3,000-4,000 in an envelope, and it's I really didn't like it, right? And it makes you kind of paranoid, to have that much cash on you. And I immediately tried to went to the bank immediately. I think people need to kind of build that into themselves a little bit. There's a couple other things, but I'll go ahead.
Well, ultimately, this problem can be solved, I think, if everyone who has like significant amounts of cryptocurrency have some system in place that basically there's no way an attacker they can cut off all the fingers they want, but there's no way you can give away your money unless, like, I don't know, some like official institution or something gets involved, right? Now, at that point, it's the same situation as just if you're just a regular billionaire or millionaire or whatever, right? So then there becomes no point in these wrench attacks. Like they might as well just attack your regular fiat rich guy.
Yeah, I mean, it's still worth attacking because they can try to get the ransom kind of stuff. But yeah, then the kind of the base level of who they attack goes way higher, right? Because ransom attacks still happen. They just happen for much more money than what I would consider common security things. Like, I know a lot of younger crypto people, they keep a lot of their holdings on their phone, which I think is just insane. Don't do that. Yeah. Do not do that, right? You have a separate device for the majority of your holdings, hardware wallet, that you don't take with you, right? You leave somewhere, and make sure those things are separated out. Same for your laptop. Don't have all your stuff easily accessible, and the laptop that you take with you to the gym. Like you said, you can't, if you are kidnapped or wrench attacked, you just can't do it. You don't have the ability to give them the money, give them the crypto. Yeah.
All right, good advice, and I think that wraps it up for this week. Look,
hold on.
Yeah.
We just got a comment here. I want you to react to this comment, man.
Fat Daddy Crypto. I sold my ETH at $26.50, waiting for $2K. It's a good one.
Why is Cardano so low? I think Cardano is so low because no one is really building on it, and there's no people are building on it, but no one is really using the apps there, and there doesn't seem to be that much activity. I don't really know where the tech stack actually stands now, but I know that the user growth is quite low, and so I imagine, much like ETH, which not a lot of people are using mainnet, that tends to affect the price of the native token.
All right, let's wrap it up. That's it.
Yeah.
For this week on the weekly, Bitcoin is becoming a core part of corporate finance, from Latin America to the Gulf to NASDAQ tickers you never heard of. Well, the dollar's dominance may be unraveling, although David may have differing views there. Coinbase has joined the S&P 500, but even they are not immune to security lapses, and with wrench attacks on the rise, this industry's wealth is becoming a very real-world target. We'll see you next week with more signal, less noise, and everything that actually matters in crypto.